Joining us now with more is CBS News business and economics correspondent Rebecca Jarvis. Rebecca, one of the things I want to clear up here is we keep seeing prices rise, yet yesterday Saudi Arabia said we're going to cut production because there's an oversupply in the market. Japan is using a lot less gas. If all this gas is out there and there's too much, why are we paying more?
Well, there's inertia here, Erica, and what's been happening in the market ever since the turmoil broke out in Egypt, we have seen prices steadily climb, and you can thank geopolitics and the pressures facing the Middle East as well as the African regions where a small portion of our supply comes from. But overall, investors are concerned. They're concerned about the future. And in particular, when Saudi Arabia, which is OPEC's biggest oil producer, when they actually cut production, that means in the future they're going to be producing less. So if, for example, we start consuming more, or China, for example, starts consuming more, all of a sudden you have that issue because demand has gone up, but supply has gone down.
So there's another reason why we could see gas prices continue to rise
Absolutely.
when they cut production. Looking a little bit closer, though, at investors and at the markets here at home, the Dow ended down 140 points yesterday. All three major indices were off more than 1%. A lot of this was based on a downgrade, essentially, for the United States. Translate that for us. What did it really mean?
Okay, so Standard & Poor's is a ratings agency that looks at our health as a country, and they say that the outlook for our financial health as a country is now negative. Why do they say that? They say that because they believe that we are running too high of deficits and that, politically speaking, there is not enough will to cut our spending and increase our taxes, because that's really the only way. Those two things, in concert with one another, are the only two things that we can do as a country in order to decrease that deficit and also decrease our reliance on debt.
So that sounds like it could be a very bad thing.
It could be a very bad thing. The bigger issue, I'm talking about the outlook. If they actually downgrade our credit rating, which right now, as the United States stands, it is the best of the best, the healthiest looking country. If they were to downgrade that credit rating to something below AAA status, all of a sudden our mortgages get more expensive. Our retirement accounts go down again. In addition to that, corporations can't borrow as inexpensively as they can borrow right now, and that leads to fewer jobs at a point in time when we need more and more of that.
So it's quite a ripple effect that you paint there. Is there anything that the government can do, the U.S. government can do, to address those concerns, to maybe do their best to keep that downgrade from happening?
That's really the battle that's going to be taking place and that's been unfolding before our eyes as far as the budget is concerned. Really, at the end of the day here, we have to, as a country, find a way to attack the expenses and find a way to bring those down, but also potentially to increase the revenues, because taxes are what we bring in revenue, and overall, we are just borrowing too much to sustain it.
All right. Boy, big wake-up call, isn't it? Rebecca, thanks.
Thanks.